Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. We are continuing our series here with our partner Santiment. I've got Brian with me today. We're going to go through the crypto market, talk about Bitcoin, altcoins, and all the metrics surrounding what's happening in the market. Brian, how are you doing? Happy Friday.
Awesome to catch up with you, Tony. Happy Friday to you. We've got some nice price growth. So Sentiment has a lot that we're researching at the moment, and all is good here. Excited for a fun weekend.
Yeah, I'm excited to dive into the details with you because I'm a big believer in looking at data and metrics, man, because you want to be an educated investor, not doing this on the fly, right? So we want to look at the data and see what it's telling us. So maybe we can start with Bitcoin because we're seeing a bounce today. Bitcoin back over 60K, I think actually over 61 right now. If you could share your screen, go through the metrics with us, please.
Yeah, let's do it. I'll start by just showing the past week here of price returns and social volume reactions. We see Bitcoin here down 6% still, despite the rise from the low 58Ks to the low to mid 61Ks just in the past 24 hours. It was down about 9% in the past week. So this is a nice rebound. Despite that, Bitcoin is actually still being discussed less than it was the prior week in this most recent 7-day stretch. So you can see a lot of red boxes here. This indicates less and less interest toward these assets compared to the week prior. And really not much special happened the week prior other than a lot of market cap drops. So this is really just indicating that there's less people overall talking about crypto right now. And I think that's a product of all of the FUD and people's beliefs that the rally has kind of come and gone. That all-time high that happened in mid-March, people don't think there's going to be another opportunity, which in turn increases the likelihood of there being another opportunity. So
Absolutely. I was just talking about it on the podcast last night where I highlighted the Bitcoin Fear and Greed Index. And I showed, hey, we went from super greedy to neutral to now fear. And that's a good sign when you're in a bull market.
exactly, yeah, you want to be in when everyone else is writing it off. You want to kind of be a counter trader to what the crowd is thinking. Now, a lot of times the crowd is very mixed and there's a little bit of bullishness, a little bit of bearishness, but those extreme times, kind of like in mid-March when everyone was bullish, that was a great time to take some profit. When everyone started to become bearish, and I say everyone kind of tongue in cheek because that's never exclusively the case, but you had the vast majority over the past 3 to 5 days really starting to spout a lot of bearish narrative. And that was indicative that we were getting very close to a bottom. Perhaps it was a temporary one and we could still get below 60K again after some of the euphoria related to this jobs report dies down. But overall, it looked to be pretty likely that we'd see a bounce like this even without this news that came out today, because of the fact that there was just so much negative sentiment and people writing off crypto.
Yeah, and these pullbacks are healthy and normal, building support levels, right? You're retesting supports, and you just zoom out and you look at the history of the bull market or Bitcoin's chart during the bull markets. You've had sometimes near 30% drops, and yet it finds that bottom and bounces up and goes to new highs. Now, eventually there will be a blow off top, but this is where using data from like sentiment and looking at the charts and you're looking at it holistically, you can get an idea what's to come next. And to your point of like the Fed and the macro, I think it seems like the Fed, it seems like they're not cutting anytime soon. It's kind of hard to gauge sometimes, but inflation is still high and the markets have been running up, with rates going up and even being paused because they sense that the Fed can't cut because of inflation. So we'll see how how things unfold in the coming months.
Yeah, it's really quick on that point. It's interesting how the FOMC report just came out and they left the interest rates the same, which was kind of expected. And just a couple days after that, there's this renewed optimism that they will cut interest rates come June, when they have that same decision next month, all because the jobs report showed a lot of stagnancy and people kind of attributing that to the necessity that cuts need to happen in order to uh, get things back on track in the U.S. economy, which has such a big impact on crypto.
Absolutely. Now, on this chart here that you're showing, I see Ethereum and XRP are in the black. They're not in the red. And this is obviously looking over the past 7 days. What does that mean? Does it mean like is it more neutral, as far as performance versus the previous week?
Yeah, just as a clarification, so this is social volume up here. This is the amount of discussion related to Ethereum being 4.6% higher this past week than the week prior. So it's good to see that they're getting a little bit more discussion. I'm pretty sure for Ethereum, it was related to the ETF discussions that had been going on in late April. The report that the SEC was likely going to reject it. But you look at the price returns, they're down 3.4% in the past week, doing a little bit better than Bitcoin, actually. And then XRP is pretty much right at neutral, down 0.2%.
Hmm. So let's talk about the altcoin market as a whole. What are you seeing there? Obviously, the altcoin market moves with Bitcoin, right? For the most part, Bitcoin pumps, liquidity flows down to the alt. But what are you seeing overall for the altcoin market?
Yeah, let's take a look at a few of these. I'll open up some different watch list segments that we have. We have layer twos here, which is one of the few that's actually up over the past week, largely due to optimism. The asset has had a very strong week. Meme coins are down significantly, real world assets down. We'll just take a look at those three, unless you can see any others here that might be of interest.
I think meme coins, layer twos, and real world assets are
Perfect.
yeah. And there's been some timely news around that too. I think yesterday BlackRock, their fund tokenized on I think Ethereum, it surpassed Franklin Templeton. So we're seeing some movement
Wow.
there.
Interesting. Yeah, that certainly could have an impact on things. But if we look at layer twos, we can see optimism here up 22% in the past week. Keep
Hmm.
in mind, this is a pretty small sample size of assets. We only have 22 that are officially labeled as layer twos, which is about right. There aren't a ton of them. And then ZK base here up 56% over the past week. These two alone, along with maybe Immutable X up 10%, and Starknet up 13.5%. These are the four assets, and Gaiman, excuse me, I should say, also up 13. These five assets are really the reason that the layer two sector has done pretty well. I'm especially interested to see how far ZK base can go because it's been on one heck of a tear lately.
Mm. And optimism, if I'm not mistaken, I think I saw it in the sentiment developer data. I think it was like at the number one spot, right? As far as developer activity.
Yeah, let's take a quick detour and look at the top 10 list right now.
Mm.
Um, just to mention how our development activity metric works, we look at the projects that are seeing the most notable daily activity in terms of their GitHub. So we automatically exclude some of the more mundane, routine things that happen in a GitHub, such as Slack updates or an automated Discord message that might sneak in there. And we only look at things that are truly showing that there is innovation and improvement being conducted and effort going into the project. But we actually have, I can show it on our tab here while it loads. This article is really awesome as it kind of shows how our GitHub tracking works.
Mm.
And really, there are three things we look for when it comes to an asset seeing high development. If they are seeing high development, it means that people behind the project believe the project will be successful. Sounds implied, but that's a good thing. And not all people behind projects believe that. Another thing is the project is shipping out more features, hence the innovation and improvement they're attempting. And then most importantly for a lot of people, they want to see in that high development that it's indicative of less probability the project is going to end up being a rug pull or some kind of exit scam. You don't see a team that's just actively working on improving if they're planning to run for the hills and take your money with them, right? That's an important fact that I think a lot of people overlook. So just 10 days ago, we updated this countdown for our community, and we showed that there were several risers on this top 10 list. You can see Optimism, as you mentioned, at the number one spot. Cardano right behind it at number two. Hedera has actually crossed the top three, a little less discussed than most, but it has risen significantly in market cap rank as of late. Polkadot, which actually shares its repository with Kusama, so these two will always be paired. They're at the number 4 and 5 spot, even though a year ago they were actually the leaders. So they've fallen off just a tiny bit, but certainly still plenty of activity on a daily basis. Chainlink, which has a big community on X and Twitter, they're at number 6, Status at 7, Ethereum at 8, Internet Computer and Cosmos round out the top 10 here. So in essence, if you have these projects in your portfolio, it doesn't necessarily mean they're going to be the best performers in crypto for the indefinite future. It simply means these projects notably have teams that are making extra effort to improve their projects and make it a viable project to be part of the crypto ecosystem and its future. So I certainly consider it a viable strategy to mix in some assets that are among the top 10 in your portfolio because they're essentially safer bets than most to perform well. And you'll notice by the market cap rank, it's not coincidental that most of these are top 40, top 50 projects here. Because the cream tends to rise to the top. And if you're a project that is actively working on keeping up with the times and improving, you're going to see results long term most of the time. And a lot of people kind of view it as chicken or the egg, like they become successful projects and then suddenly they have a bunch of work done. It's usually the other way around. They have teams that are comprehensively working from the get-go, and then they see the results over time.
Yeah, that's a great insight. And as an investor, I'm looking at this data from Sentiment, and like I hold HBAR, I have some Cardano, Polkadot in my portfolio, as well as Chainlink. I may want to look at Optimism, right? It seems like their team is doing a lot of work here. And to your point, it shows that this is not some rug pull fly by night project. They're actually trying to build things. There's a lot of activity. So it's one of the validation metrics that you can use.
Exactly. Validation is a great word for it. You can do your own research on projects you like, but one thing that will help give you an extra vote of confidence is seeing that they've got notably high development activity like these 10 here.
Awesome.
Yeah, we could jump back into those altcoin segments too while we're at it. So we touched on layer twos. Taking a look at meme coins, they have been pretty hammered as of late. Obviously, the past 24 hours, everything is looking pretty good. But if I go to the past week, we can see that there's more projects that have really dropped than projects that have actually done well. You can see Pepe has still done okay, but Dogecoin down 6% in the past week, Shiba down 5%. The actual meme coin meme is notably down as one of the biggest losers. Milady meme coin, there's some goofy names in here. But yeah, I mean, there's a few exceptions. There always are. SPX 6900 up significantly. Real Smurf Cat. I have a tough time saying these names seriously, but
Yeah.
I know they have real investors, so I don't want to discount them. You can see very clearly that it's kind of a dropping sector at the moment with very little discussion. You can see even Pepe, that's up this past week, has 18% less social volume to it than the week prior.
Yeah, it's fascinating because obviously we talked about the correlation with Bitcoin. As Bitcoin moves, it's the rising tide that lifts all boats. But when it starts to drain, liquidity is flowing out, alts are gonna bleed as well. So I think meme coins are bleeding off of that. But it's all liquidity. So once it starts coming back in, these memes can run again. But I would rather see the list of altcoins that we just looked at on the developer list actually move versus meme coins. But hey, that's just my opinion. I don't control
Yeah.
markets.
You'll notice there's not a lot of development activity among meme coins. Almost all have none or very slim amounts.
Mhm.
So that's the nature of meme coins. They're there to be speculative assets that are kind of crowd driven, um, and kind of like the GameStop and AMC's of the world in equities. These are the kinds of coins that move most notably when the crowd wants them to move, and
Mm.
when they get a large contingency of people who come together and either dump or accumulate these coins. Kind of like we saw with Dog with Hat over the past 6 months. It just went on an incredible rise due to a ton of support from niche communities that decided they wanted to pump it up.
For sure. And I guess in the one meme coin I saw there on that chart was like Doge had like 1.1% developer
Right.
activity. At least it has something.
Exactly. And I do want to say there are probably a few GitHubs here that aren't fully connected. So there
Sure.
could be some other ones that are trickling in. But if we did connect them, their GitHub repositories, assuming they're not here yet, they would be pretty slim. So keep that in mind that Dogecoin probably is not the only one that has more than zero.
Mm,
Um, they're just not priorities for us because we know they're not going to have numbers on a daily basis that look much different than this one for Dogecoin.
sure. Awesome. Maybe we could take a look at RWAs. Yeah, perfect.
Yeah, so real world assets, we have 47 or so on this list, which is a pretty good sample size, and they give us an idea of how the sector is doing on a daily basis. We have a few standouts like Klima Dow up 36% in the past week, Goldfinch up 15%. Uh, the highest cap that's notable is Ribbon Finance up a little over 7%, but you can see again, it's mostly just bleeding from this sector, even though it had been doing quite well uh, during March, especially, and then everything has kind of taken a. They took a big flush in April, and overall the market cap is down 4% at this time, while volume is actually up compared to the previous week. So it's doing a little worse than the average altcoin sector, but I know that real world assets still have a heavy amount of interest, and this could be more that like just a regression to the mean because of the strong early part of the year that a lot of these assets had.
Yeah, agreed. And look, I often remind my listeners like nothing goes up in a straight line. That's markets can just go up like a rocket ship forever. There has to be pullbacks, building support levels, and then testing resistance levels and so forth. So normal, when you align this data with the charts, it just shows you see a clearer picture.
100%. Yeah. So altcoin wise, there could be, this is a good segue actually. There could be an argument that we see a bit of a rise here. You can see on this chart, there's a ton of underbought signals firing off because they took such a hit over the past 5, 6 weeks or so.
Mm.
Um, Even though Bitcoin's, staying afloat up at 61 to 62K at the time of this recording, altcoins took a pretty big beating during this time. And that's why you see these underbought signals. This is a measurement of midterm returns for the average traders. So we combine 30-day, 90-day, and 180-day returns of the average wallet for each of these assets. And the further up it is in green here, that's how underbought the asset is. If it goes below the zero, which there are very few of them, that means that they are overbought because there have been major positive returns toward those specific assets. So, eyeballing it, 95% of these assets clearly are showing underbought signals right now. And assuming Bitcoin can kind of stabilize and range a little bit, I wouldn't be surprised to see at least a little bit of an altcoin relief rally coming up here in May.
Oh yeah, I could certainly see that as well. Many of these coins started to bounce. So that's a lot of coins that are,
A lot.
yeah,
You want
that underbought, like as you're
maybe a few
saying.
specific ones here. P Network looks notably underbought. Very
Mm.
few people are discussing these. You'll notice the ones that are getting the least attention are some of the ones that are most underbought because they've been underperformers for so long that they've just kind of been left in the dust. But Frax share is up there,
Mm.
Bella Protocol. We've got Audius, Clover, and Chromia. Eternity Chain. These are a lot of assets way outside the top 100, but they're not like, 1,000 and lower assets either. There's some that I guarantee a lot of people watching this have heard of, and they've gone, "Oh yeah, what about that asset?" Well, they've been getting crushed, which is why they are showing such severe underbought signals right now, indicating that mathematically there's an argument that they could be good buys if the markets kind of stabilize out from here.
This is great data. This is something I need to pay more attention to, see what are some of these opportunities I could jump into.
Definitely. Yeah, we can go over this kind of chart anytime. It's one of my favorite models uh, on Sentiment, and everyone on our pro membership roster has access to it.
I know one of the other big f things, I know we didn't have it on our list, but like AI tokens, those are bleeding too, right? I mean, along with the rest of the altcoins.
Yeah, yeah, not as badly as they were in April. They're seeing a little bit of a recovery. And I still think there's a lot of argument that they can outperform most of the sectors as we head into the summer these next couple of months. But yeah, AI, they were they were obviously the biggest story of the first quarter of the year. And then finally saw a bit of a retrace expectedly because all markets dropped. But yeah, over the past 30 days, um, we see that the vast majority have been crushed. There are a few exceptions. Arc Block has almost doubled in the past 30 days, and it has really risen up the rankings of AI and big data assets. T Fuel has actually done quite well. We have Forta, Aleph, and Robonomics, just as a few others. But you can see for the most part, some of the big stories of the early part of the year, Render is down 15%,
Mm.
BitTensor down 28%, the Graph down 20%. Interesting that Near has held up pretty well. They're about break even.
I didn't even know Near was AI themed.
I think it's more on the big data side. Maybe
Ah,
your commenters can specify more specifically. We've got too many assets where I can be, an expert on every one of them. But I know that Near is in the basket of AI and big data.
ah, interesting.
Yeah.
So any other data items you want to highlight? It looks like you got a Bitcoin chart here. Some good.
Yeah, I wanted to highlight how the whales are doing because we've talked about the bearish sentiment a little bit and how the crowd has really started to turn on crypto and how that can often be a bottom signal. You want to kind of do the opposite of what the regular normies and the small traders are thinking at any given time while actually following what the sharks and the whales are doing at any given time. And you can see they started to take profit in this final week of March here,
Hmm.
and prices really started to plummet as they did. I do think there's a bit of an overreaction in the price, and it maybe shouldn't be dropping quite as much as it has, because you can see by the lines I've drawn here, there was clear accumulation that started the last couple days of January. And during, let's just say, since January 28th until now, wallets that hold between 10 to 10,000 BTC have accumulated 182,000 or so more Bitcoin during that time. And even with the profit taking that they've done since April 3rd over the past 5 weeks or so, they've only dumped about 40,000 of those. So we're still in a pretty good long-term time frame here in terms of whale behavior, where they're accumulating more than dumping. It's just a matter of perspective. Do you want to look at the past 3 or so months, or just the past 5 weeks? Because the former looks pretty good right now, still, in my opinion.
Yeah, for sure. It's great to zoom out and get the context of the macro because in the short term, the data can not tell the whole story. And this, to your point here, even though there's a bit of a sell-off, the majority is still holding. And I wonder if, some of the selling is the ETFs rebalancing. Look, that's a normal thing with ETFs, and maybe some of these folks. There was some outflows, I think, reported by the issuers. So
Mhm.
maybe it's a bit of that.
Yeah, I had the ETF dashboard, which is also available on Santiment,
Oh, awesome.
prepared. And we don't have full inflow and outflow data for everything yet, but we do have it for some. This top chart here just shows the overall amount of volume per day for the top 7 Bitcoin ETFs. And notably, we saw a big drop yesterday. This could have been a good sign of capitulation and
Mm.
traders on the ETF side deciding they've had enough because markets had been bleeding and went down to 58K on the Bitcoin side. So we saw easily the lowest amount of volume of the ETF's existence, at least accounting for these top 7. Yesterday was that day. I'm very curious to see how it shows at the end of today once we get the Friday data going into the weekend. We're
Mm.
going to see if it stays low or if it rebounded. I would guess it rebounded back to a normal level of like $2 to $3 billion, uh, because of the fact that markets have bounced pretty considerably. But we'll have to wait and see. But I do think that this yesterday's low volume is a pretty damning sign that there's some disinterested traders who are bowing out now.
Yeah, it goes back to like that sentiment, right? The people who really understand the market cycles and everything are not going to be bothered. Um,
Right.
but those who are kind of moving with the prices and the emotions of it are going to be bothered. So, could that be like the retail or invest some of the investment advisors, I don't know, who are like, oh no, I better dump some of this or whatever,
Yeah.
because for my clients or whatever it may be.
And it could be related to the FOMC news just a couple days ago too, that kind of showed that interest rates were not going to be cut, and we'd have to at least wait until June. Maybe that impacted the traders who were exposed to the ETFs as well, and they decided to, take it easy.
Mm. This is really great stuff, Brian. I love it. I actually need to grab this ETF chart because I didn't know you guys had this, so I want to bookmark this.
Definitely.
Because this is really insightful. Um, Anything else you want to share before we wrap it up?
As a final point, we can just mention what's happening on the social side of things more granularly. And we do see that trending words, we have Coinbase here at number 3, notably,
Mm.
because they had a really great Q1 earnings report that came out. Overall, I think this is a pretty nice sign for crypto. Obviously, the US is the most impactful economy for crypto. And when they have a trusted company that is putting out positive profits like this, um, it at least adds to their confidence that we aren't going to see one of or the leading exchange in the US not having any sort of FTX type of collapse. You never know for sure, but we at least when we see this kind of report come out showing that they're doing very well, it decreases our concerns of a big collapse happening, and I think that's good for crypto. So that's a notable trending word on number 3 there.
Mm.
PayPal integrating with MoonPay, I think, is an interesting topic. You can see that being mentioned at number 6 and number 8. And just as a reminder, these top 10 words are measured by the highest percentage increase in discussion across social platforms compared to their normal level of discussion. So when you see Coinbase, which is already talked about a lot,
Right.
showing up in our trending words, that means it's being talked about a lot all of a sudden.
Mm. Yeah, I love this data because it gives me insight maybe as to what maybe happening, whether it's like Coinbase stock price or Coinbase doing something major in the market or a
Yeah,
certain coins doing certain things, whether it be price movement or partnership or something like along those lines.
exactly. It's a great way just to get in tune with what's driving the markets and what topics you should be paying attention to.
Hmm.
Um, and like on the trending coins dashboard here, you see Tether actually at number one. Uh, it does look like there was a reported $5 billion profit reported. And that's got something to do with why it's being talked about a lot. And then during any sort of bear cycle, like we had been seeing the last 5 or 6 weeks, you tend to see more interest in whether Tether is holding the amount of funds that they say they are, and people question its viability as the top stable coin. USD coin often gets thrown in here as well. So I'm not surprised to see it at the number one spot. Notably, we have XRP at 5 and Bitcoin at 6, meaning they're getting more discussion even compared to usual.
Hmm.
And then Ethereum at number 10 here. So all three of those ultra big assets are in the top 10 at the moment. So there is a lot of focus on the large caps at this time.
Mm. Brian, always great stuff. I love this data. I wish I had more time, and maybe I need to make time to just be going through this and to make better decisions on some of my investments. But um, some of the things that I took away from here are very helpful, and I'll need to look into optimism a bit more.
Yeah, I'm very interested too, and we might put out a report about the project, especially considering it's been pumping and getting a lot of increased crowd interest. But no, I love catching up with you here, Tony, and I'm looking forward to doing another one in a couple weeks. And in the meantime, we just recommend not overreacting to any sort of big price swings happening because we've seen um, a lot of chopping lately that's kind of based on anytime people get too euphoric, it just goes back down. And anytime people get too fearful, it goes back up. So, you know, obviously the best moves are usually in small increments rather than, putting in money or taking out money that you can't afford. Uh, and would cause you to feel a lot of remorse if you make the wrong moves.
For sure. Good stuff, man. Thank you so much for joining me.
Thank you, Tony. Till next time. Take care, guys.